and welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Thursday morning and lots of cues to digest this morning, given the fact that we've had big ticket earnings like TCS and HCL Tech. We also have index changes, as in the new HDFC, the merged HDFC will be trading from today, and of course, it will be one of the biggest, it will be the company with one of the biggest weights on the index, 14% or thereabouts. And of course, we also have very positive global cues coming in after the cool-off in US inflation data. Well, we'll also be talking about all the stocks that will be in focus today. We'll be talking about, all the stock queries that you have with our experts on the show. So if you have any queries, send them in to us on our YouTube feed and we will have them addressed. But before we do all that, let's take a look at the top headlines at this hour. CPI inflation for June in the US comes in at 3% on a year-on-year basis, lower than expectations of a 3.1% rise. Stocks rally on Wall Street. Both Nasdaq and S&P 500 close at the highest levels since April 2022. In fact, dollar crashes to its lowest in over a year. Asian markets surge on a cooler than expected inflation print in the US. The GIFT Nifty is also hinting at a higher start for the Indian market. Looks like we are set to hit that 19,500 mark once again in today's session. Inflation accelerates once again domestically. India's CPI inflation for June comes in higher than estimates at 4.8% amid a surge in food prices. Industrial output, meanwhile, grows 5.2% in the month of May. TCS reports muted numbers for the first quarter, largely in line with expectations. Constant currency revenue growth slows to single digit after 9 quarters. Meanwhile, HCL Tech disappoints as revenue declines over 1% and margin shrinks by over 100 basis points. The company, however, maintains its growth guidance for FY24 at 6 to 8%. In key earnings to track today, Wipro is expected to post the weakest growth among large-cap IT peers. Also watch out for quarterly earnings from Federal Bank. And among stocks in news, we put the spotlight on SpiceJet, Patanjali Foods and Lupin, among others. Well, let's now bring on board the first guest on our show, Mahantesh Sabarad, independent market analyst, joining in this morning to talk about, the IT earnings that have come in last evening. Good morning, Mahantesh. Good to have you on the show. I would like to get in your thoughts on TCS's first quarter performance. It was muted, as was being expected, by the street, but the management is hopeful of, margins clawing back over the course of the year. In fact, margins have, of course, dropped to 23.2% on the back of an increase in salary that they had announced in April. But would you say that, achieving that 25% margin mark this fiscal looks virtually impossible for TCS going forward?
Good morning, Nandita. Okay, as far as TCS results are concerned, they indeed are muted. But then let's not forget that we were expecting the IT results to be quite muted. The year ahead should see them post revenue growth in the range of somewhere 8 to 10%, probably lesser for some. As far as the margin is concerned, this is a seasonally weak quarter, as you are aware. Even last year, the margin posted by TCS for quarter one was 23.1. This time it's 23.2. It's not materially different. That's primarily because they have these salary increases happen in April on most occasions. So clawing back that margin back to 25%, the question that you asked me seems a little tough, but is doable. Simply because as the year progresses, the employee cost effect should start wearing off, and thereby by the natural process itself, you should see some degree of margin clawback. Having said that, 25%, like I said, is achievable. Probably the exit quarter for the year is where we can potentially see a 25% kind of EBIT margin for TCS.
All right, that's the view then. But talking about HCL Tech, it was a big miss on the margin and revenue front. But, the company has maintained its guidance of 6 to 8%. But, so I was reading some brokerage reports this morning, and they believe that, in fact, achieving the upper end of the guidance looks like a tall task for the company. Would you concur with that?
Actually, I would disagree simply because, HCL Tech has also announced an acquisition, a German company, where they should be able to see potentially more than $150 million accrue on an annual basis to them. Or let's put it this way, that it's roughly about 40 odd million per quarter. That should bring in useful growth number for them over and above the 6 to 8% guidance that they have given. So I believe that HCL Tech has given a sort of muted guidance for the year in terms of the growth ahead, and they should be able to top that 8% band sort of quite easily. Their deal wins are also strong. Let's not forget that.
Right. When you look at the valuations of some of these, large cap IT firms, they've come very close to their long-term averages. And, since last quarter, the stock prices haven't really moved much. So would you say that, the valuations at this point in time look pretty attractive, and maybe this is the time to actually buy into some of these stocks and wait for the recovery to kick in maybe from the fourth quarter of the current fiscal?
So let's talk about the valuation. Very often we see the valuations are pegged to the underlying growth that the companies would exhibit ahead. Most of the IT companies have talked of a guidance which is in single digit, and likely the prospects are in terms of achievement going to be in the single digit range. So with a single digit growth, possibly a small accretion in margin ahead, and favorable currency movements, we should see them post PAT growth or EPS growth in the early double digit. But that still doesn't kind of justify the valuations that they have just now reached. You're right that the stocks have not moved for the past 3 odd months. There was an attempted move to go higher. But relative to the market, now let's talk it this way, that on an absolute basis, these valuations may have touched their long-term averages, but on a relative basis, relative to the underlying market trend, they seem to be underperforming. They seem to be there seems to be a scope for certain valuation expansion. Very difficult to say at this juncture. I would rather wait for one more quarter, because this whole revenue guidance thing that they have topped off in single digits, we need to look at this way. If there are strong deal wins ahead, probably those guidances can be upped. So not until the guidances are up would one look at any meaningful valuation expansion.
All right. I also want to ask you about your thoughts on the mid-cap IT pack. Last quarter, of course, we saw mid-cap IT companies performing way better than the large cap peers. This time around, would you expect the same to happen again? And let's also talk about LTI Mindtree. That company will, of course, be replacing HDFC on the Nifty from today. What are your thoughts on that one?
So as far as the mid-cap IT names are concerned, I think they have reaped the benefit of certain business segments, particularly on the engineering services side. Most of the large cap IT services have an engineering component within their services, but it is relatively smaller. Having said that, these IT companies doing well because of the engineering services was in a way expected. Then we should see these services clock a much higher growth relative to any other sub-segment within the IT services. We also have a situation for the large cap companies where the potential AI ML impact on their earnings seems to be negative, although the debate is still open. I tend to believe that it is not, but I must acknowledge that debate exists. So having said that, that AI ML effect is something which is not touched most of the mid-cap IT companies, and therefore they have done relatively better. As far as LTIM is concerned, mere inclusion in the Nifty will drive better valuation for the company, better flows. This is a statistical kind of eventuality that will happen. But that here's a company that's still growing rapidly relative to the other companies. So that inclusion in the Nifty is a good thing for LTIM. And most of them, like I said, mid-cap IT companies will start coming into the large cap band. LTIM is just did that.
Right, we spoke about the IT sector at length. Let me also get in your thoughts on, where you see value in the markets at the current juncture. We've seen autos, FMCG, realty, hog the limelight in the first half of the year. Would you expect, one of these pockets to take leadership in the second half? Or do you think, something like a pharma or, maybe banks once again would take the leadership in the second half?
So there's one sector you didn't name of all of them, capital goods. I think I would rather bet on the capital goods sector at this juncture in the market because there has been a great rush for capex that is happening, particularly from the government side, and we should witness that fallout to actually brush upon the capital goods company. Having said that, among the other sectors that you named, I would be particularly concerned about valuations on the negative side for such companies as automobile companies. While the growth has returned post COVID, the operating metrics, margin metrics don't seem convincingly enough for valuations to really expand. Banks, as you are aware, or the financial services in general, has been doing pretty well in a falling interest rate environment. Or rather, I'll not say falling interest rate environment, I should say paused kind of interest rate environment. And that should augur really well for them going ahead, because the earlier worry was that the inflation will not be sufficiently brought under control for interest rates to really start falling. Now we are anticipating that there could be fall in interest rates, probably 6 months to 9 months down the line. If that being the case, banks should start really doing well. The other sectors, pharma, there is still no light at the end of the tunnel. Pricing for most pharma products is getting a little problematic. US FDA inspection is something that we have observed for several years is a risk event that most pharma companies are unable to ward off or control properly. So they are largely dependent on the domestic industry growth, domestic market growth. So I wouldn't touch the pharma companies. The others, probably realty to some extent.
All right, Mahantesh, with that, I think we're running out of time. So thanks a lot for taking out time and joining in this morning. It was a pleasure speaking to you.
Thank you, Nandita.
Well, with that, let's bring on board our next guest for today. Joining in is Ruchit Jain of 5paisa.com. Hi, good morning, Ruchit. Good to have you on the show. Well, 19,500 is one level that we are not being able to cross decisively once again. And as the earnings season progresses, do you think this level will emerge as, will remain the key resistance for the Nifty?
Well, hi, very good morning, Nandita. Well, I don't think so that this resistance would remain resistance for a long period of time, because if you look at the market trend, the trend definitely is very strong. The markets have seen a sharp run-up in last 3 months without any meaningful correction. And what we are witnessing in last 7 or 8 trading sessions, it's just consolidating in a narrow range. We are not witnessing any kind of price-wise correcting action happening. Secondly, if you look at the data, then the data is quite positive in the derivative segment, where FIIs have formed decent amount of long positions in this series. And if you look at the total number of contracts, about 72% of their entire positions are on the long side. They have been buying in the cash segment too, where in this month so far, in July, so far they have bought equities worth around 10,000 crore. So whenever we see such phase that FIIs go long in the index future segment and they also simultaneously are buying in the cash segment, such situations usually lead to a very strong trended move. And what we have seen in last few days, Bank Nifty was overbought. Bank Nifty cooled off and then have corrected by about 1,000 points from the recent high. But Nifty has not corrected, because if banking have taken a backseat, then Reliance came to support the market. And if you look at the broader markets, the buying interest in some of the other stocks or some of the other sectors is getting continued in spite of some consolidation. So this clearly indicates that the market trend is very positive. 19,300 we are looking as a very strong support for now. Only if 19,300 is breached, then we would expect some price-wise pullback. I think otherwise this is just a time-wise correction which once get over, this 19,500, 530, which is the resistance, that would be taken out very soon.
All right. The trend, of course, remains on the upside. Well, before I move forward, let me ask you your views on HDFC Bank, given the fact that, we will see the new merged entity start trading from today. And, of course, LTI Mindtree will replace HDFC on the index. But going forward, HDFC Bank, how would you, advise investors to play this stock now? We have some queries also trickling in. Karthik Selvaraj wants to know your thoughts on this.
So I'm quite positive on HDFC Bank. In fact, if you look at I'll start with the Bank Nifty itself and then come to its components. So the entire banking index have seen a good run up in this recent rally in last 3 months. So banking, of course, being many of the stocks are heavyweights and the Nifty as well. So I think this sector always becomes a leader to drive the markets higher. And what we are witnessing a good amount of consolidation happening in the IT space. So I think within the heavyweights, banking stocks would continue to take the markets higher. And Bank Nifty Index too could see a momentum back towards that 45,000 or even above 45,000 very soon. Now coming on to the heavyweights, of course the weightage has increased for Bank Nifty of HDFC Bank within the Bank Nifty Index. And this stock is also trading around its 89 EMA support. In last few days, the prices have already seen a correction from 1750 to 1630 now. Some short-term volatility could be there because of the adjustments that some of the funds have to do. But I think this dip which is going on, it's a good opportunity for investors to form long positions over here. So if you have a view from next 4 to 6 months perspective, then I think at current price it's a very good it's a very good buy to go long on HDFC Bank. So buy in a staggered manner, go long at current levels, and if we get any further dips towards 1550, 1560, which is the major support zone for the stock, look to add more positions over there. But of course, as I said, have at least 4 to 6 months point of view, then I think you can expect good returns from this stock.
All right, that's the view on HDFC Bank. Then let's talk about Lupin, Ruchit. Yesterday, of course, the stock was up somewhere around 3%. There was, good news surrounding its Pithampur unit. It had, cleared the US FDA inspection. And this morning, there is, some bit of news that, US FDA has issued Form 483 with 2 observations for its Nagpur unit. Now, this unit, of course, was inspected between 3rd to 11th July. We've seen a very strong rally come in on Lupin. It is in fact perched at near about that 52-week high. Do you think this bit of news could play a little bit of a dampener and maybe we could see a dip in today's session?
So if you look at the positional charts, then till the month of March, the stock was a relative underperformer within the pharma space. But since the month of April, what we have seen that a lot of buying interest has been seen because the stock has not performed at all in last few years. So high top, high bottom structure is in place in the stock, and even the price volume action is good because the recent up moves have also been supported by good volumes. Now, although the news is negative, but I think momentum is strong enough just because the momentum readings are a bit overbought, so we could see some cool off. But I think one should not worry much about the stock. It is holding about its 20 EMA, which is around 880 mark. So buy and dip strategy should be kept for the market for the stock. And in case if we get any dip towards because of this news, towards 900 or 880 range, I think that should be a good opportunity to buy the stock again.
All right, that's the view on Lupin. Then let's talk about the stock of the day, Ruchit. SpiceJet, of course, there have been concerns surrounding the financial health of the airline. Then, of course, it has to make interest payment, to Kalanidhi Maran, and the Supreme Court has in fact not given any more time to the carrier to dole out interest payment, to Kalanidhi Maran and Kal Airways. But the company is of course yet to report its financial results for FY23 as well. But now there is news flow that Ajay Singh, promoter, will be infusing as much as 500 crore rupees into the airline. This comes as a breather, but the stock yesterday was up 4% or thereabouts. But do you see more legs to this up move when it comes to SpiceJet?
So within the airline space, the 2 listed companies which are there, Indigo and SpiceJet, if you do any comparative analysis on any time frame, then of course there has been a big underperformer from SpiceJet compared to Indigo. So this clearly indicates that investors are more interested towards Indigo within this sector rather than going with SpiceJet. Maybe because it's quite oversold, we have seen a lot of sharp correction on the weekly and the monthly charts in last few months. So I think some pullback move could be expected in the stock, but it's too early to say that the stock has bottomed out or we would see a reversal of the trend. For that, we need consistency in rising volumes along with the price up move and a high top, high bottom structure, which needs to be seen. So for now, I think just a pullback move could be expected towards 34 rupees. 34 would be the immediate resistance for the stock, and the stock has good support around 27 rupees. So this is the range in which we could see consolidation for some more time in the stock. But I would read, as of now, I would read just as a pullback move within a broader downtrend.
All right, 34 levels would be the immediate resistance on SpiceJet. Let's talk about the defense and electronic manufacturing services space. Ruchit, these stocks have been high flyers over the last few sessions. In fact, if you look at the likes of Mazgaon Dock, you look at Jain Tech, these stocks, double-digit gains on a daily basis. Investors, every day we get queries as to, what one should be doing with these stocks. Do you think it warrants a buy, or would you wait for, some bit of cool off to kick in and then, advise investors to buy into these stocks?
The trend is very strong, and this trend is not strong since last 3 months along with the market. So I think markets bottomed in March 2023. But if you look at the defense stocks, then defense stocks started their rally much before the indices bottomed out. So I think this clearly indicates a good uptrend which is going on, and this trended phase is likely to continue going ahead. So a lot of positive news flows regarding to order flows we have seen recently, I think, which should support the price, going ahead for next few quarters as of now. So we are advising to look for stock-specific buying opportunities still at current levels. I think BEL would be one stock where good upside could be seen in medium to long term. So Bharat Electronics should be bought at current levels, but yes, in case if any other stocks such as Mazgaon Dock or HCL are there in the portfolio, they should continue to ride this trend.
All right, that's the view. Ashish Chawla had a query on Mazgaon Dock, and we also had a few queries from Sasidhar on Zentech. Hope this answers your queries. Let's talk about, I spoke about the Nifty IT Index at length with Mahantesh, but, there's a query on our feed, particularly from you. Saeed Khan wants to know your thoughts on the Nifty IT Index and which stocks are looking attractive, given the fact that TCS has reported a muted set of numbers, as was being expected by the street. But do you think, since there was no major disappointment coming in when it comes to TCS at least, do you think it's a good buy at the current juncture?
More depends on your time frame. If you are a short-term trader, then of course I would tend to stay away from IT space for now, especially the large-cap IT names, until we see a resumption of the buying interest. Maybe Infosys results could be a trigger for that. But no, if you are looking from a long-term perspective, then of course we have seen a decent amount of consolidation in the IT names. So if you are looking from a longer-term perspective, then one can look for buying interest in stocks such as TCS at current levels also. But if we talk from a short-term perspective, during last quarter results when Infosys reported their numbers, since then we have witnessed that long underperformance in the IT names, and they have been consolidating within a range. So I think investors were clearly waiting for this quarter results, that how the next quarter results would be there, or in terms of how the guidance for maybe second half of the year would be there. So I think that would drive the momentum going ahead. But in this strong trended phase, what we are witnessing is the leadership is not coming from the IT this time. Leadership is coming from banking and NBFCs, capital goods sector, or defense stocks, which we spoke about. So I would tend to advise that if you are a short-term trader, short to medium-term trader, then go with the leaders rather than finding opportunities in the underperformers. But yes, if you are a long-term investors, then I think this underperformance in the phase where you should start buying, and in a gradual manner, so that you could accumulate a good amount of a good quantity of such good stocks. And when the rally comes, your portfolio, these stocks should be there on your portfolio. So my clear advice is, depending on your time frame, if you're a short-term trader, then go with the leaders, whether capital goods sector, defense sector, or banking and finance. But if you're a long-term investor, then it's a good time to start accumulating TCS.
All right, if you're a short-term trader, avoid IT sector. But if you're a long-term investor, you can look at some of these stocks. That's the view coming in from Ruchit. But Ruchit, let's talk about another stock that's in focus today, Patanjali Foods. An OFS for up to 7% stake sale has been launched, and promoters are looking to offload this stake. OFS floor price has been set at 1,000 rupees a share, which is of course at a discount to current market price. The stock has done fairly well over the last 1 month, up somewhere around 18% or thereabouts. If there is some bit of a dip coming in today's session, would you advise investors to nibble in?
Well, the OFS price is significantly steep from where we see the stock price closing yesterday. So I think definitely we would see a gap down opening for the stock. But I would wait for the stock to stabilize. Definitely good support is there around 1,950 range. So in case the stock comes around that 950, then I think that could be a good level to buy the stock. So for now, I think better to wait and watch how the reaction is there post the gap down opening. In case some buying interest is seen in the 950,000 range, then one can look to buy the stock over there.
All right, that's the view then coming in. But, one last query. I think we have just about time for one last query. This one is coming in from Prabhu on e-Mudra. This stock was down somewhere around 1% yesterday, but over the last 5 days, it has, clocked in 3 to 4%, and last 1 month has gained somewhere around 17%. What are your thoughts? Would you expect levels of, in fact, yesterday it hit a fresh 52-week high as well. On the charts, higher highs, 500, 550 levels expected over the near term?
Well, I think quite possible, but it's very difficult to give any targets for this stock because the stock is trading at all-time highs. And it does not have much historical data. It's listed about a year ago. So I would say in such stocks, better to ride the trend with the trailing stop loss method, find out good supports in the stock and keep a stop loss below that. And as the stock price move higher, keep revising your stop loss higher until the trend changes. So for now, the support for the stock is placed around 430. So place a stop loss below 430 and continue to hold the positions if you have any. And when the stock price goes higher further from current levels, keep revising your stop loss on the higher side.
All right, that's the view then. Hope that answers your query, Prabhu. But with that, I think we've come to the end of this query segment. Ruchit, what are you recommending for viewers this morning?
Yeah, so I have few buy recommendations where the chart structure is quite positive. First would be buy call in RBL Bank within the banking space. Well, this private sector bank has been doing quite good since last 1.5 months. The momentum readings are indicating a continuation of this trend. So one can look to buy RBL Bank from a short-term perspective with stop below 191 for possible targets around 207. And I think metals would be in momentum today because the fall in dollar index that we have seen of late, I think that is good for the metal stocks because dollar index and metals usually have inverse correlation with each other. So within the metal space, NMDC has given a breakout from consolidation yesterday. So the short-term charts are quite positive after this entire consolidation that we have seen since last few months. We have already seen some of the steel stocks have gained momentum in last 2 or 3 weeks, but I think some other names, especially some high dividend yielding names such as NMDC, should see some buying interest now. So NMDC can be bought at current levels with stock below 108 for targets around 117. And my last pick would be SRF. So this is one of the stock where I am taking some contra call over here because the stock has already seen a good amount of underperformance. In fact, all the chemical stocks have seen a good correction of late. But I think the SRF is trading around its mid to long term support now. So the risk reward ratio is quite favorable to go contra in this stock over here. So have a bit positional perspective, maybe next 2 to 3 weeks of point of view and go long on SRF at current levels. Stop loss should be below 2150. Possible targets are 2300 and beyond.
All right, RBL Bank, NMDC and SRF, 3 stock recommendations coming in from Ruchit. Ruchit, with that, thanks a lot for taking out time and joining in this morning and addressing all of your queries as well. It was a pleasure chatting with you. Well, with that, we've come to the end of this edition of Morning Trade. But on a programming note, tune in at 12 p.m. to get an exclusive chat with the new CEO of TCS, K. Kritivasan. My colleague Chandra Srikanth will be in conversation with him. Tune in at 12 p.m. and catch the exclusive conversation right here on Money Control. Well, with that, we are at the end of this edition of Morning Trade. Thanks a lot for watching. But don't go anywhere because coming up next is Opening Bell.